Good morning, everybody. Hope you all had a good weekend. Just quickly going to go through the analysis here before market open. Just get an audio check in the chat to make sure audio is good. We're looking at the US 100. Going to do a quick rundown here. I'm basically looking for prices to draw up into this weekly fair value gap up here. Just work you through. Looking at this daily fair value gap, this daily gap here. Looking at that weekly fair value gap, looking at old highs here. Looking at these equal highs. On a 4 hour, I am looking at this gap, straight into that, send out off higher. There's those relative equal highs on a daily. Going down to 1 hour. Nothing much to see here. On a 15, looking at this 15, looking at that as the higher time from PDA rate, traded into. Pushed price off higher, looking at these equal highs. Looking at this 15 fair value gap and this daily relative equal high there as a target. If we want to go higher, we have this daily fair value gap and we have all those targets above us. On a 5 minute, I'm using this as a filter. This gap here, if we stay above this, then we will reach for this equal high as well as this 15 fair value gap right there. It is now 9:21. So let's read the 9:30 macro before I do a rundown on the rest of the pairs here. Nothing yet that I would use as an entry. Do have this low high, lower low here, breaker block, which that is has occurred before the macro. So that's not something that I would be interested in there. We'll just have it noted on the charts. We do also have this low high, lower low here. Just don't like that particular one. Doesn't stand out to me. I prefer this one here because we have these lows here. Trades lower, takes out this low here. We have a fair value gap, and we traded above that back into it. Obviously before the macro, so that's not something that I would be interested in here. Keep in mind that today is a bank holiday, so that's very important to keep in mind. Quickly looking at the DXY, I want to see lower prices here. There's your monthly, weekly. I'm mainly looking at this. Get this out of the way. Looking at this weekly fair value gap here. Pull that through. We traded into that. I'm looking for that to send us below this and this low. Relative equal lows here. Just a view of the daily. Not much to see. We do have this tiny gap in here. I want to see price draw down, reaching for this 4 hour. We have relative equal highs. We took those out. We have a old low sitting here. Want to see price draw into this. We have a fair value gap, and we do have an old low coupled with a daily fair value gap here, which I want to see price draw down into this level. On a 1 hour chart, we have these up close candles here. Just took the last one. That's the order block. We traded into that order block. Price has respected that and has seen a rally down lower. These are the 25% and 75% quadrant levels of that weekly fair value gap. And we do have the 50% consequent encroachment level noted as well here if we do trade into those. So there's a view of those 4 hour lows. That would be the draw. And then obviously we have the old low and the daily fair value gap here. Really interesting and beautiful to see that we traded right up into that 1 hour order block. We tapped it, didn't come back to it again, and we have moved down lower, trading into this fair value gap. So obviously that is something I would just take note of. Just have it on the charts. We traded into that. Did not fail to reach the consequent encroachment. That is a sign of weakness. And we have since traded down into these lows. We still have relative equal lows here. So still liquidity above the marketplace. So that would be dollar index. That's what I'm looking at over there. So let's turn our focus. Let's focus on NQ. And when the macro is over, said and done, then we can just take a look at what I was looking for on US 500 as well as US 30, just to get a view of what I was looking for there. Just give you a quick glance here. You have that breaker block there. That is something. If price does go into that again, then that would be a potential tape read scenario. That'll be something that I would be tape reading. Just make this green. That'll be something I would tape read long. Let's see in here. We have this fair value gap here. We also have fair value gap in there. So that fair value gap and that breaker block, those are clean levels. Look at this stop. We would be able to wither this fair value gap. I would have a stop below that level there. That gives me 3 PD arrays. Obviously, take profit would be 5 handles. Here's the 5 handles reaching for this 15-minute fair value gap. So let's just see. That would be something that I would be tape reading. Just watch your charts. If it trades into that, then we would see if that would be something that we would take. Let's quickly look at the US 500 or ES. Give you a glance of what I'm looking at there. Quick rundown. So, yes, we have consequent encroachment of this weekly wick, and then we have the high there, which that will be seen on the daily. On the daily, we have equal highs here, old highs. We also have this gap, and we have a fair value gap here. So that is something that overlaps that I pulled through when we traded into that, rejected that level. Something to have on your charts. On a 4 hour, not much to see. On a 1 hour, we have high to that low. That is a fair value gap right there. You see, we cleared that low, traded off higher. And that we have a lot of highs in here still. So I'm still looking for price to get above this high, get above this and this high here. Relative equal highs. Want to see price draw up into those levels. So on a 15, we have equal highs here, way too clean. I want to see price draw up into that, take that out. And then we have this weekly wick consequent encroachment. Want to see price go above, up to that level. And then we have those daily equal highs resting above those levels. So we just tapped into that 1 minute breaker block. Let's go back to that. Let's focus on this. See if it would be something that I would take an entry on or not. So for no rejection. Might want to draw below this low. We do have a volume imbalance. Okay. So that right there. Just see that candle has 25 seconds left before it closes. 9:29. That would be an entry right there. That would be something I would tape read. has given me that rejection, targeting the highs 929 to 930. Market open in the next candle. So it's all day is a bank holiday today. So no high impact news events are expected. In other words, you would be expecting high resistance liquidity runs, low probability conditions. So we're tape reading that setup. So we did get that rejection. We cleared this low. We have this fair value gap here. Those are all things that I'm looking at here. Just going to see, did we trade into this gap? Such a small gap. Let's enlarge this. So failure to trade into this gap here, that is, to me, that's bullishness. Okay, so we didn't trade into that gap. Volume imbalance left, didn't trade back down into that. We did trade into it here, but we didn't get back into that. Tapped consequent encroachment, so that is beautiful. Bearishness. Those are all good confirming signs with this trade. Things I would be looking at if I would be in this position. So with low probability conditions in mind, bank holiday, you're not expecting volatility. So it's going to be a lot of high resistance liquidity run here. So this would be the position. We would be inside of that trade. Not a lot of risk on the board here. It'll be about 2 handles. About 2.25 handles to be exact. So not a lot of risk on the position. It's a Monday. You're not expecting much. So we're tape reading this. We're looking to see if we can get above this wick consequent encroachment. And then the high. Look to see if we can get 5 handles from this move. So we have a fair value gap in there. So let's look at this. Look at this level, BPR. For the sake of clarity, there you go. Let's look at this level. We have this BPR, and we also have order block, and we have another gap down there. So you're looking at these levels here. You do have a volume imbalance down there. Order block lines up with consequent encroachment of this gap. So look how we trade here. Right on that consequent encroachment, do we now run up higher? Looking for signs to confirm that the trade is still respecting the order flow. So it doesn't look like we are showing any rejection yet. So we're likely going to trade into this lower fair value gap coupled with this order block. So today is a perfect example of trading on a bank holiday. This would be the types of conditions that you're going to be facing if you're going to be trading on these days. So we're tape reading this bank holiday. Okay, so we traded into that order block, fair value gap, like the fact how we traded down, and we have shown a rejection and a close above this level. We have to see how this next candle closes here. Is that going to close above or is that going to close below? So we have 2 PD arrays here. So if we lose these PD arrays, then I don't want to see anything below breaker block, state fair value gap. That would already be 3 PD arrays. So the stop would then be pulled up higher. If you take a stop on this, it's nothing major here. That would be about 2 handles that you're looking at. So that's not the end of the world. So we tap back into that breaker block. We want to see rejection at this level. I would like to see a close above this order block. That would be something that I would be looking for. So far, no rejection here. Most likely, this one is going to hit the stop. Let's see though. If it doesn't reject at this consequent encroachment, then the stop will be hit. So on a day like today, where we do not expect any volatility to come into the marketplace, it's low probability. You're not expecting a lot here. I like how we have rejected the consequent encroachment, but I want to see the close up higher and a move away from this level. We have about 8 seconds left on this candle. So I want to see a higher close on this candle. So no rejection here on this one. So this is where it's going to hit the stop here on this one. So I'm not expecting much. I put the stop up. We've already lost 2 levels. So it's most likely going to hit the stop here. Just going to leave the stop to do its job since I did pull the stop up higher. So we already lowered the risk on that position. We're just going to leave it to play out. If it hits the stop on that, then the stop then did its job. By the way, the seasonal tendency for NASDAQ would be higher for the month of September, and dollar index would be lower prices. So in dollar index, we're going to pull you over here. We're crouching inside this level. So we're holding this level. Okay. So that still looks good. That's what I want to see moving higher. Trade above these levels. Still looking good. I already pulled that stop up higher. Because 1, 2, 3 PD risk coupled with that privilege gap in there. So that would already be me reducing that stop, managing that position. Like how we rejected that, traded below this low here. So 937. And just pull this stuff all over. Like the way we took out that low. We did trade into this volume imbalance again here. That is something that would be noted. Put it back into that one last time. Volume imbalance. So at this point in time, I don't want to see anything below that volume imbalance. Okay, there's no need for it to go back down there. We took the stops out. There's no need for it to go back down here. So I don't want to see it go down there again. I like the fact that we traded right through this, no resistance. I like the fact that we traded through this, no resistance. Looks good. We are still yet to take out the 15-minute equal highs on the ES. As soon as we get above this high, that would be stop moved up into a profit covering fees and commissions. Dollar is moving against the Nasdaq, which is what we want to see. By the way, dollar index does have a bearish seasonal tendency for this month, so I do want to see them oppose. That would be something that I would be looking for, as compared to the month of August, where we did not see dollar index. Suppose we a lot of times dollar was just trading along with the indices, so I didn't use that confluence there if it's trading against the indices. So we traded up here. Look at that gap. We have that fair value gap. This one, that one. I want to see a trade back. I can tap back into this one. Tap back into this BPR. Back into this inversion, not BPR. So there's the high. So this would be where the stop would move into a profit. Let's look at the higher time frames. Okay, we took out these highs. So the next target, we took out this high there. So I'm looking for it to trade above its high right there and then reach into this fair value gap. And that gives 5 handles. And that's all you need. It's a bank holiday, low probability, high resistance liquidity runs are expected. Take what you need and you get out. Simple as that. From the entry up to that, it's roughly about just shy of three handles. Low high, lower low. Two levels coming together with this really gap, that inefficiency. Also have an inefficiency in here. So these are all things I'm looking at these things. Even though I'm not annotating them, I am looking at them. Doesn't have to go back down there. Trades into this, that's good. That's tolerable. So that is, let me just annotate here. This is a breaker. Just B breaker block. When you see it reject, trade up higher. It is going to be a game of patience here. High resistance liquidity runs and no volatility coming into play. It is a bank holiday. So we have traded that consequent encroachment. I want to see it take out the high. I want to see it take out the high. Be reaching for that high. Beautiful rejection. Want to see it go above this high. 943. We are soon to approach the 950. While we wait for this, let's go back into the US 500. Let me just open this up, pull this up here. I think we left off in a 15-minute. I was looking at this high, waiting for that high to be traded. It seems like today ES is the sixth sister. And then we're reaching for this weekly weak consequent encroachment. Looking at this 5-minute fair value gap, as long as we stay above this, then we still would be bullish. Okay, so that high just got cleared on US 100. So what I would do in this point in time, let's see here. We have 3 PD arrays. I would pull this stop up, and I'm not able to do that with the trading view, but I would pull the stop up to here. Secure some profits. And that would be where I would close the position off. Okay, that would be done and dusted. It's close enough to the 5 handles that you were looking for on the position. Want to see a draw into this 15-minute fair value gap. As soon as it touches the low right there, that would hit the take profit if you didn't take it off. And that would be 5 handles banked. Done and dusted. Not too bad of a position. On a bank holiday. But this is where I would take it and be done with it. I wouldn't be holding on to it, expecting it to reach higher. 5 handles and that would be enough. Specifically on a bank holiday, which is a low probability day. You're expecting high resistance liquidity runs. So that would be how I would frame that idea and how I would be managing that specific position. That is how I would be doing that. So on a day like this, even if you are a trader that would generally be looking for more than 5 handles, let's say 10, maybe 15, maybe 20, I would still only be looking for a quick 5 handle run on a day like this. If I really was forced to sit down today, I would be looking for 5 handles, take the 5 handles, and then I would be done. I wouldn't be forcing myself to get 10 or 15 or 20. Just go in there, go for a scalp. It's low probability, and get out of there. So it's a get in, get out, and you're done. You're not anticipating this to be a home run. I do want to go over the US 500 now. Let's look at this. On a 5 minute, I'm looking at this 5 minute fair value gap here. As long as we stay above that, we would be bullish. I would want to see prices reaching higher. Equal highs cleared. Those were on a 15. We cleared those out way too clean. And of course, wasn't looking for anything on a 1 minute. But what I did this morning was I used the fair value gap on a higher time frame, which could be 5, 15, 1 hour. And I used it as a filter. As long as we stayed above this, it was going to be bullish. If we were going to trade below this and stay below this, then I was going to be looking for bearish price action. But I had the general idea with that seasonal tendency behind me that gave us higher prices for the month of September, as well as dollar index giving us lower prices for the month of September, with dollar index having clear lows, those 4 hour old lows. Since I wanted to see the dollar be trading opposing indices, I wanted to see indices trade up higher and get those 15-minute equal highs and reach up into its uh, longer term higher targets. Let's have a quick look here at the US 30. Not much to see on US 30 here. I'll open up on a weekly. Start this on a weekly. Not much to see here. I just saw this old high, weekly old high there. Right there, weekly old high. I was looking at that. On a daily, low, high, lower, low. Breaker block, pull it through. We have an order block. Pull that through. We traded into that. We have had a fair value gap sitting here. Trade into that. Move price away for our see price traded up higher from that daily breaker level. Look how the candle bodies are exactly on this price point. It's beautiful to see how none of this stuff is random. How price trades to these levels and reversed exactly at that price point. Those candle bodies are beautiful right there. Even though we wicked through that, it's beautiful to see the candle bodies stay on that. For our order block mean threshold, right there. Now, over here, I was using this for our order block. I didn't want to use this one because we traded into this one to the mean threshold of that and rallied off higher. We failed to trade into the mean threshold of this order block here. We did trade into it with this one, but we did not trade into it with this one. We traded into this order block's mean threshold, and we traded into this wick consequent encroachment there. So the order block was noted, candle bodies respected that level. The wick or the tail is something that you could have on the charts as well. Looking at the 1 hour, this fair value gap, as long as we traded into this, stayed above this bullish price action, you can see we failed to trade into the consequent encroachment. So that is a sign of bullishness. Candle body closed above the 75% bullishness. And then we have, there's that old weekly old high, and we have some 15-minute equal highs here, way too clean, looking for price to draw up into that. $15-minute breaker block. You see here, that was not a 15-minute. This was a 5-minute breaker block. I opted to use those 5-minute fair value gaps on ES and NAS. I was looking for something that I could use on a 5 on US 30, and I found this low, high, lower, low. So that breaker block was clear, no fair value gap is visible here. So I used this breaker block, pulled it through, and you can see on the 15, looking at the 15, look how we traded into this level here. See how the candle bodies just stayed around this level. Failure for candle bodies to trade and close below this level. We also have these two consecutive down candles here that could be used as an order block if it should trade deeper into this level. And that is something that you could be looking at as well for price to do that. But I just liked that 5-minute breaker block level. To me, this was looking me and staring me in the face. It was obvious. You could also use these order blocks here. You have order blocks sitting in here, traded up, traded into these down candles here. Those two pushed up higher, closed above the high. So that would validate this order block, traded down into this order block, pushed up higher. So then these order blocks would be valid. So you could take those two, pull it through, and they traded back into those order blocks, and price ran off higher. To me, the breaker block was obvious. As long as we stayed above it, that would indicate bullish price action. The order block is something that you can take note of and have on your charts. If we trade into the down candles, If it wants to trade deeper, then you could take the mean threshold of these two candles, use that by taking a fib and pulling a fib on them. You could pull that level through, and if price trades all the way down into this lower one, then you could just make use of that as well. You just have to see how price is trading, and then you have to look at that level. You see, we traded one swoop move, we traded down into that lower level of that order block. Those consecutive down close candles pushed away. You're just gonna have to look and see how price is trading around this order block to see if you're going to be using both down candles or if you are going to be using the lowest down candle here. Could also just be using this candle, mean threshold of that, pull that through. Also have this fair value gap. So there's more than one level that you could use. Just eyeballing it, see that candle bodies are sitting right at the level on a 1 minute to. It's not random that these things are trading like this around these levels. And then you also have this fair value gap. So there's more than more than one way to approach this here. There's not just going to be one specific way to approach that. If I take that fair value gap, consequent encroachment of that inefficiency of this inversion, consequent encroachment lines up with order block mean threshold. Okay, so there are different ways of approaching it. You might use the order block mean threshold. Somebody else might look at this inversion, pull that through. Somebody else might be looking at this order block sitting down here, or both of these candles and pulling quadrants on these. Let's get the fib. So different ways of doing this stuff. See if I can get this here. I don't know if I can get this. Hold on. Let's change the fib real quick. I just do 75%. I think it's 0.75, 0.25. Let's just look at this. If you do that, hold on, I gotta pull that fib out more. I need to pull this fib out a little bit. I could just pull it out. If you do that, you're going to come to that same conclusion. If you do pull quadrants on the order block, price traded into the lower quadrant of the order block, 25%, and the candle bodies are sitting exactly on that level. That coincides with inversion, with order block mean threshold. It all comes down to the same exact price point, which is this consequent encroachment of the inversion, the mean threshold of the fair value gap, or the lower quadrant of both of these order blocks. So there is a couple of different ways how you could look at that and how you could come to the conclusion that price traded into this level and you're expecting a move higher away from that level. So different ways of looking at that, different ways of approaching it. Different people are going to look at different things. Not everybody is going to be looking at the same exact level on the price chart or the same exact thing. Some people might be looking to go long when you're looking for shorts, and both parties could still get a profitable trade in that particular trading day. So dollar index is consolidating in here. Hold on 1 minute. Yeah, Dollar index is just sitting here doing nothing. Bank holiday, dollar index consolidating, not expecting much. Like I said, I'm not expecting much from this. But nonetheless, proof enough shown live. I referred to this breaker block. Looking at this 5-minute fair value gap hard time frame PDA, right? I was looking for bullish prices, looking for to get into this 15 fair value gap, and then for price to eventually reach up into this daily relative equal high, which that is going to be the draw on liquidity for this week. That's what I would be looking for price to reach up higher, dollar to tank, indices trade up higher. Nonetheless, we looked at this breaker block. Price traded into it at 9 o'clock, rallied off, took the high. When it started coming down, I was looking at this breaker block, looking at this small imbalance, pulled it through, looking at this fair value gap, determined that this would be a good level to place a stop. We had the breaker, we had the fair value gap, 3 PD arrays. Stop would be down there. We took that entry there. Stop down there initially. Price traded up higher, expanded up higher, came back down into one more time into this volume imbalance, cleared out this low, took out this low. I managed the position by saying, okay, we traded up here and we had a fair value gap here, fair value gap there, fair value gap there, fair value gap, order block. So we traded up through these fair value gaps. So I said, okay, we had the one fair value gap, the next fair value gap. If we were to lose this breaker block level, coupled with this fair value gap, that would be 3 PD arrays. Stop went up higher below the breaker block. That gives us 3 PD arrays. And notice we traded into the, if I move this, we tapped into the high of that 5-minute fair value gap one last time before we started rallying up into the 15-minute fair value gap low. Is that not beautiful? Boy, it's stuff like this that gets me psyched, gets my blood pumping. See this accuracy, how it's all predetermined, how price just respects these levels. Look at this volume imbalance. Look at how price, let's expand this up. I love seeing this stuff. See if this thing is going to move here. Pull me with that thing. Look at that volume imbalance. Did we not trade to the low of this volume imbalance and pulled it back? It's beautiful to see, folks. If you know, you know. If you've put in the work, you see stuff like this repeating every single day, week after week. It's beautiful to see. We rally down below this low one more time. Volume imbalance tap the high of this 5-minute fair value gap. I then said stop was moved up. If it takes out the stop, it was barely going to be 2 handles for it to take out. So the stop was already pulled up higher. So I already managed that position as best I could. So I just left the stop. If it takes the stop, it's 2 handles, then the stop does its job. Takes you out of the trade, preserves capital, and it is what it is then. You come back for another day. I said when we were sitting inside of this consequent encroachment of that breaker, I said I wanted to see price give us a reaction there and send us higher. I wanted to see price trade higher off of that level. Wanted to see that reaction, wanted to see it trade up higher. Next candle, we open up, tap down lower, volume imbalance, and then price started running up higher. I then said we wanted to see price go above this high. We're expecting high resistance liquidity run. It's a Monday. It's NFP week. It's a bank holiday. I'm expecting high resistance liquidity runs. I'm not expecting home runs here. So it's going to be give and take. It's going to be slow. You're going to have to be patient. Price made its way up, took out this high. I then said, okay, price is up, cleared this high, pulled the stop up. When price made traded above this high, and then said, okay, imbalance right there, pull that through. It can trade back into that, and then I want to see it take the high. As soon as we traded up there, that's close enough. It just barely tapped the high. 5 handles done and dusted. The target was 15-minute fair value gap low. That was what I was aiming for. Traded it right there, 9:45. Take profit would be hit. Even on a day where you have a bank holiday, you're not expecting much here. Even if you are a trader that would trade 10 handles or 15 or 20 or more, this would be a day where you would expect low probability, low volatility. If you have to be in there, then you would be going in and you would look for a short 5 handle run. Take your 5 handles and be done. That's it. You're done for the day. Close it. Go do something else. You're not expecting home runs. 5 handle scalp. You're going to be scalping intraday, and that's it. Done. Done deal. Simple, quick, 5 handles. And you could come back another day and you could make 5 more, and then you would have your hypothetical 10 handles. And if you would be looking for 10 handles a week, then that would be a done week. If you're looking for 15 or 20, then you would have to do 3 more trades coupled with this one to get that 20 handle target to be done. So today we've gone in here, we've proven that this stuff still works on bank holidays. Like ICT would always say, this stuff still works. We've proven that it still works. The accuracy is still there. Time of day was still there. Predetermined levels still there. It all still worked. Today was a bank holiday. It's NFP week, first week of a new month. Still took out the 5 handles. Still shows you that it was possible to get 5 handles out of this. Generally, in a bank holiday, you would not be looking to trade on a bank holiday. Let's open up that calendar. Let's take a look at this calendar here. So, bank holiday all day. How ICT teaches it is a bank holiday is not a trading day. The day after a bank holiday is not a trading day. It's low probability. That's when all the money comes back into the marketplace and they jump into the market. So, on a bank holiday, the day after a bank holiday, you would be sitting on the sidelines. That is a general rule It's a recommendation from ICT. If you've watched these videos, if you've gone through the core content, if you've done the 2020 uh, mentorship, he talked about this phenomenon where bank holidays and the day after a bank holiday or trading days where you would not be looking to be in the marketplace. So that is something that you should have it written down in your notes in bold. Bank holiday trading session. Put that in your notes and make sure that you put that as the title, that if you're going through it, that you would easily be able to find that and reference back to that. So bank holiday, day after that, you're not really going in there looking to take a trade. Wednesday, Jolt's job openings. Not really something I would be looking to trade. Unless you're going to sit down, you're going to be trading the 950, 950 to 1010. And then we have Thursday, we have 8:30 unemployment claims on Thursday. And we have that 9:45 PMI, which most likely it's going to be chop, messy, and it's going to clear up at 9:50. And you might get the mover to kick in at 10 o'clock, but 9:50 starts that macro, and you would be hunting for an entry for a setup. And then the volatility would kick in at 10 o'clock, pushing that position, making price spool, taking out old lows or trading back into an inefficiency, depending on what is in price at the time. Another important rule that ICT also states is that on an NFP week, non-farm employment change, NFP week, your trading should be done by Wednesday morning. Your trading should be done and dusted. So that would keep you out of this PMI on Thursday as a general rule. Rule of thumb, it's not always going to be the case. Not always going to be the case, folks. Sometimes there might be a beautiful move in there, but more times than not, it's going to be a low probability. Just like we saw today in today's uh, tape read, that we were still able to grab 5 handles. Price was not too bad, not too bad of a structure in here. We had this breaker block, hard time frame PD array. We were expecting bullish prices. We had nice clean draw, 50-minute fair value gap. Any other NFP week where we do not have a bank holiday would be a Monday that you would be going in and you would be looking for 5 handles. Look for a 5 handle scalp. Any other NFP week Monday. That is something that ICT has mentioned as well. On an NFP week, he would be going in on a Monday and he would be looking for a possible trade. And he would be done by Wednesday AM session. He would close it off and be done for the week. Now, this particular week, bank holiday. So ICT would not be in there. So as a general rule, you would not be in there on a bank holiday. Now, it's possible on some NFP weeks after we have the non-farm payroll release to sit down And you could go in there and you could go look for 5 handles on the silver bullet. You could be looking to trade after 30 minutes after the release of non-farm payroll. So non-farm payroll comes in, you give that time to play out, and you would then be hunting for a possible setup 9:30 or 9:50 to 10, and then you'll be looking at the silver bullet from 10 to 11, which would then just basically be the 10:50 to 11:10 macro. You could be going in there, you could be looking for something to trade. I wouldn't be too concerned about this FOMC here because this is just a medium impact FOMC member Waller speak. It's not your heavy FOMC news event that's gonna be kicking off. So for next week we have nothing on Monday, nothing on Tuesday. We have 8:30 CPI. Wednesday. On Thursday we have PPI 8:30 and nothing much on Friday. So you would be going in looking for something at 8:30, perhaps 9:30 if 8:30 did not deliver anything or if there was no trade to take. You would obviously be looking for 9:30 and then going on to 9:50. That's where I would close it. Same thing on Thursday. I would be looking at 8:30. If nothing comes to fruition, look at 9:30, look at 9:50, up to 10:10, and then close it off. Wouldn't even be bothered sitting down on Friday. Neither would I be sitting down on Monday or Tuesday. There's no volatility going on. Unless you want to go in on the Monday and you want to scalp 5 handles, then that would be completely plausible here as there would be no bank holiday. So that would be 100% plausible for you to go in. Again, it's a Monday. Mondays, as a general rule, have slow moving price action. You're not expecting really quick, fast moves. You're going to be expecting high resistance liquidity runs on a Monday, slower price action. You get into it slow on a Monday. So generally, I don't really like to trade on a Monday. I like to just pass on a Monday, come and sit down on a Tuesday, sit down on a Wednesday. If you just go look at the core content, and ICT talks about days of the week that have a higher probability, then he mentions that Monday, Tuesday, and Wednesdays have the highest probability for trading scenarios. And the best days would be Tuesdays and Wednesdays, and sometimes possibly Thursdays. That was all covered in the core content that he gave us. So if you want to go watch that, you can go watch those videos. And I believe that was covered in the day trading the day trading concepts. I believe it was month 7. I'm not 100% sure. You're just gonna have to go look at his channel, and you're gonna have to go and find the month where he dives deeper into the day trading concepts and rules. And he gives you a whole bunch of rules on when should you be avoiding a London session, when should you be avoiding a New York session, and he talks about all those things. So it's definitely worth a watch and a note taking, noteworthy. This is where we will close this one off. Hopefully you have found something insightful out of this. And we will be doing another stream tomorrow morning. We're going to sit down tomorrow, same time, 9:15 up to 10:10. and we will tape read this PMI and look to see if we can get 5 handles out of that one. So we'll be sitting down tomorrow again, same time, same thing. And this little nice Monday phenomenon is something that we will dive into again next week on Monday. So expect another stream on next week, Monday as well, around the 9:15 to 10:10. And we'll see if price wants to repeat this phenomenon. Until then, good luck and be safe.